basically what I do, this is the main screen that you will see usually. You will see the SPX, which is DES, you will see the NDX, NASDAQ, and you will see the oil and sometimes gold. Whatever it is, I will put it here. Whatever I'm watching, I'll put it at the bottom here. So these are the main thing, but I can always change them, right? The small charts. These are 987 tick charts. 987 tick is an important chart for us. Basically, the final look will be at a 987 tick chart for confirmation. Now, I was looking at the USD CAD, which is here, this chart, right? I was looking at this and I realized we have a possibility support. We just had major news, CPI news, and the USD CAD started bouncing, coming back down hard, right? And of course, other markets moved, but I cannot, focus on everything at the same time. I have to prioritize. So what I did my Fibonacci levels. So I did something like this, my Fibonacci levels. From the very bottom of the wave, I have a line here. This is a support area. But the main one, there's another wave from this bottom here, and there's another support area right here. There are two support areas. Why? Because they are lined up with my 62% retracement. If I erase this, if I look at Fibonacci, for example, see Fibonacci's 62% retracement is one of my favorite levels to focus on. But that is only to anticipate the market. So we are anticipating a bounce on the USD CAD for the US to get back stronger, because now the US is getting weaker compared to the Canadian dollar. So now I have two lines on the daily chart, right? And the main line is sitting just at the bottom of this area. You see this zone? This is a very important continuation zone. We call it a knife. See, it's straight. It's and the top of it is where it just bounced, and the bottom of it where my support is. And from here, students or members would know to scale down to the hourly chart to further confirm. We anticipate with the big charts, we confirm with a smaller chart, right? So now we have two levels here, two lines, and the both printed on a smaller chart. And now we wait. We have two choices. We have a choice of waiting for these levels to hit before we grab a long after we confirm. Or if it retraces back up now, a choice for another short to bring it back down. So the choices are as follow. If it goes up from here, which is possible, and retraces to a reasonable area, we grab it short, and we take profits here, or maybe take multiple levels of profit if you do in multiple levels, right? Or you wait for it to touch one of these levels, this or this. I prefer this one, okay? But then we have to confirm when it gets there. And from here, we grab it long. So we have to wait. So in a nutshell, I anticipate using my bigger frame chart, weekly. The weekly is kind of not visible or not clear to us. The daily, this is a historical daily, and I have the daily, which is intraday. So the intraday, I have the levels. I am anticipating a support from this area. Then I scale down to the hourly. And then we scale down to the 987 tick chart for the final confirmation. Final confirmation will include confirming with other indicators that we have, such as the power lines, and which is part of the training, part of the indicators that members receive. These are the power lines. For example, the green ones indicate resistance. The red ones, once you see them, they indicate a support. And now we wait. looking at the USD CAD, as I explained earlier, you notice that it is going back up. Now, the area that it decided to bounce from is visibly important. You see it, like it's you see it here. It's the red level right here, red zone. We call it the top of the knife in our terminology. You can call it whatever you want. That doesn't bother me, as long as you understand there is a heavy volume. This is a point of control in this session and in these multiple sessions. There is almost 80% chance the market will come back to it and cover it up all the way to this level or the bottom, this level, right? So if we're looking for the market to cover it, to go inside it and cover it up, there's a big chance that we might have a short on the USD CAD, which means I need now to prepare my levels for the resistance area, which means I start with my Fibonacci's. I have two levels, two options, one of them from this high to this bottom, and I see a level at my favorite, supposed to be 62% here, but I also see different levels coming up. But my favorite area using the volume profile is this gap. Let's see if it matches up with the 50%. It matches up with the 50% if I do my Fibonacci's from the very top. So I have these levels to watch for a short. These are my main ones. There might be something smaller, some area that might bounce from an earlier level, but again, I have to choose the strongest levels. You can choose different levels. They could be like good for a quick scalp. For example, there's a level, and this is a small chart. This is a 987 tick chart on a USD CAD, right? There is a level right here, this area, somewhere here. And of course, once we get there, we have to find confirmations. And some of the confirmations are the power lines, as you see. You might see some flickering lines here, the SAL indicators. You might see an arrow pointing down at that time. So we have to anticipate the level and then confirm and then execute, okay? So for now, we are just waiting on things to happen. Let me explain. The USD yen, or the yen in the futures market. Futures market yen goes the opposite way, as you would understand. US yen in the forex market starts with the US. US is the main currency here. USD is the main currency. USD versus the yen. But in the futures market, you have the straightforward yen, which means it's actually the yen versus the US. The yen, JPY, versus the US. So they go opposite ways. Although they move exactly the same, tick for tick or tick for pip, but they go opposite, right? Now, that being said, looking at the US yen, we understand the US is getting stronger against the yen. And today we had CPI news and the US dollar took a big hit and it's coming down, right? But where we are sitting now on the yen, on the US yen, you have to be very careful because we are at a level of rejection. What is rejection? A rejection is, using volume profile, a rejection is where you have two levels of volume profiles, two levels that are differentiated with a different level, which means here, I'll expand this. You see, we have, let me explain. We have this zone of volume profile and we have this zone of volume profile, and this the price is trying to break it. So now we are, if I go to if I mark this, this is a very important level. This is the entrance to the next zone. We mark down the level that is going to be crucial for us for the US yen. Why? Because once we go below this line, we are going further down because it's going to break the support. This is the final support for this move. We have two levels, and this is the final support for them, right? This area, and you will learn that in details through the classes or the. And if I look at the 60-minute chart, you see we're sitting at a very crucial level. We are about to get in below the zone, which is very important to us. Why? Once we go clearly below the zone, right? Once the hourly, for example, closes below the zone, below this line, we are in a different continuation zone. Why? You notice the level of the volume profile here is all kind of the same, yellowish. So this we call a continuation area. So once we get into this, I'm not going to touch it for long. In fact, I'll try and look for possibly it comes back down and then go back up and a short from this zone down. Okay? It is very important to acknowledge the continuation zones. Now let's examine the Fibonacci level. See if we had any Fibonacci zones. See, it's exceeded the 62% retracement. It broke it. Now it's coming back down lower. If I extend my Fibonacci's from the lower zone, see, we are on a complete down move on the USD CAD, which means also I will be looking for a short, bringing it down to at least this area, bottom of this. You notice this is looks the same, right? On the volume profile, which means if we get into it, there's a big chance that we might complete it. So I will be looking for a short if it goes back up to this zone, to the upper line, and from
USD/JPY.
and from this area, possible short. Okay? Or maybe a bit lower. I'll mark it a bit lower so I would catch it when it gets there. Once we get to that level, I will even switch to my 987 tick chart. All right? And my 987 tick chart has the same lines. It looks busy. 987 tick chart looks busy. Why? Because it has more confirming indicators. These SAL indicators, you can reduce them. I could do substantial attraction levels. It has 10. I can do 5, which means I can only read 5 of the highest pending orders in the market. And you see them flickering. For example, you see, I'll just pause for a second. You see them, changing because some people, some institutions or some traders will put see here, a big entry here, pending order here, and then they will move it, or somebody else will come with a bigger entry or bigger pending order, and they will oversee this one, right? I was looking at the US yen, right? And I said we have a level of, and while I was explaining, I said I would rather, for now, look for a short. And I drew a line, remember? I drew a line from this level. I said this level could be a good level for a short. Look what happened. The market went up to the line. This is part of the confirmation too. Went up to the line. And then it started bouncing down. We also, at that time, we had a couple of power lines intersecting. You see these power lines? These are good for confirmation. Now, remember the line, I put it down a little bit. I said so I can hear it. So the main line will be on the small chart. The most effective area will be here, a bit higher, or a bit higher. But let's see if it's valid. If it's valid for a short. Okay, it is valid for a short. Now, the good thing about the short is that if we validated that, remember we validated that with a small chart, 987 tick chart. We validated that with a few things. Let me remove these lines so you understand them. I use Fibonacci's tremendously. Like I always use Fibonacci's for my levels. Now I don't depend on them for final confirmation. I use my volume profile for anticipating the levels first, and then for pinpointing the exact levels of reversals, I use Fibonacci's and levels of resistance, right? So one of them would be here, where we are now, which is looks okay for now, and we wait for confirmation and see what we're going to get. And we have a lot of action here happening. See this action? You just notice the SAL indicator popping up, see, and pushing the market down. SAL indicator is entries from big boys, big entries, big traders, big trading bots, could be institutions, but you can customize it. You can have 50 of them. It's up to 50 levels, substantial attraction levels up to 50. If you put 50, you'll have a very busy chart. So I'm using only 10 just to get the highest 10 in the market. And by the way, let's assume you don't have, you don't want to use Sierra chart. You don't have Sierra chart. You want to just join the live room. You want to join the Telegram channels. You don't want to, install Sierra chart. You don't want to install the indicators. You just want to get the lower entry package that we have that is offered by Target Trading. You can still use whatever. You can use, our levels. You can use the commentary. You can use the trade calls, and you can trade your own charts. Like you can trade using MT4, for example. This is an MT4, right? You can use your MT4. You can use any broker you have or chart you have, charting system. It's optional. Even if you install Sierra chart, you cannot trade. We designed the thing with Sierra chart. You cannot trade through Sierra chart directly for safety. It's used only for indicators and market analysis. Now, you noticed how through the top-down analysis, right? Top-down analysis that we did, you noticed how I anticipated the market, first of all, to possibly continue lower, right? To continue lower, I realized there's a bigger chance to win in a short call or short trade than going against this whole thing. And I put a line here. I said, if the market comes back up to this level, it's a good chance to go short. Now, so far, I was just anticipating the market, right? Once we got to that line, I realized there's a chance now to short the market with a precise level. Now, the precise level means you have a stop loss already established, right? So the stop loss would be somewhere above that entry that you chose. It has to be coordinated with the volume profile. You realize if the market goes from here, if it has gone against you, the maximum you can let it go would be this area, right? Otherwise, it's going to continue through this. We call it suction tube, which is low resistance area. The lower volume indicates lower resistance. Even when the market bounced down from here, you see it spiked up as a fake maybe escape. It bounced from the lowest level. See that arrow here? This is a low level volume area. It bounced from it. Now, if you grabbed your first target, you're good, right? And you can basically move the stop loss to break even and wait for it to break the lower line. Once we break the lower line, The breakage of the lower line means a continuation all the way down through this yellow area. It's a continuation zone, right? About managing the trades. Now, since we, for example, let's say you grabbed the trade, you grabbed short the trade. Let me see if I could do a demo so I could chase it with you guys. For example, since we, let's say, grab the trade and you are making some profit here, for example, and you know this line here is kind of a do or die level. It means if the market breaks it lower. Remember, this analysis is taken from a bigger frame. It doesn't make sense here, but once you look at your 60-minute chart, that it makes sense. So this line, the lower line, is printed on a 987 tick chart. This is a do or die level, meaning if it breaks it, it's going to come back down to the lower line. If it doesn't break it, the market could go back up to your entry point, which means at this time you should have taken your first target. And the way I recommend managing the trades is to do a 3-contract trading, 3 lots or 3 contracts, right? Could be micro, could be mini. That's the beauty of Forex and CFDs. You could do micro, you could do mini, and you can do standards. And I'll explain. 3 lots. First 2, target 1, you take 2 out. If you did, for example, 20 pips, T1 times 2 contracts times 20 pips, for example, pips. We call them pips, we don't call them ticks. You can call them ticks, doesn't matter. Then you made 40. So now you are plus 40 in the profit, pips. Now your stop loss could be 20 ticks or 20 pips risk. You can leave it if you want to grab a bigger move, or you can move it to this level. No random moving the stop. I don't recommend randomly moving the stops. There's always levels that I can teach you. We call them smart stops. It's part of the education too, right? But now we leave a runner to get down to this level. Any questions? Things changed. I'm just trying to finish this analysis on the US yen. Remember we grabbed we said this is a valid area for a short earlier. It came back down. It struggled here. I mentioned it's good to take profits, first target here, because if we break this line, we have a chance to go to this line for a reason which I'll explain. But it actually bounced down and then bounced back up. Now, I'm still looking at the USD to be weaker today, until at least 10:30. It's 10:08 now, Eastern time, AM Eastern. So now we have 2 levels for possibly grabbing the short again or joining the short again. So if you grabbed the first trade and you made some profits and you got out with break-even stop loss, you're good. You're good. But now there's another chance for us to grab it again, either from here
USD/JPY
or higher. So now let's see if there is going to be a chance for the market to bounce down. And I'll mark it with 2 arrows. We have one level here and the other level here. And both of them, if they break this line, they can go back all the way down to the lower level, as you see indicated. Okay, you see there's a lot of action. There's a lot of action here. There's the SAL indicator, which is, heavy volume coming in, as you see. So if it starts bouncing down, there could be a good chance for a short continuation, right? You see how it's bouncing down from here. Now, by the way, it could these charts could look very busy for some. Every single indicator we have, it's customizable, and maybe we'll get a chance tomorrow to do a full session on those. Okay. On each indicator, we have 5 of them that members can benefit from. High end, very very good, and they could be used for futures and forex at the same time. All right, so let's wait and see in the video. When I said I like this level, and you guys heard me saying I like this level for a short, in fact, this is going to be a very good level for a short, which is here. I'm sorry, this here. When we started bouncing down, when this candle turned to red and started bouncing down, my confirmation, and Heidi's asking, what was your confirmation? One of my confirmations was actually we had a Fibonacci level, 62% retracement. If you do this, and I showed you earlier, Fibonacci level right here, you see 78% retracement from this is a Fibonacci level. We also had another Fibonacci level from here, 50%, and also I had a fact that my risk was just above the spike high, because if we break the spike high, it's going to go to the next level, so I know my risk. It will be beneficial, and also I had the SAL indicator popping up. You notice we had a lot of action in this SAL indicator showing up, which means there was actual volume in what do you call it? Contracts coming in, heavy ones, and these are very heavy. Okay. Another indicator that we could use for confirmation would be a power line indicator. For example, I don't have them here; they did not show up on the top. But if we had a power indicator, for example, let me remove these. These are distractions. Right? If we had a power indicator, another, let's say, green line, showing up from a straight line from here, like this, would have been a good positive thing, like these green lines. If we had an arrow indicator as well, let me see. I don't have it on this chart, the arrow indicator. This is the small chart. Another confirmation would be this arrow, for example, if it had showed up here, would have been a good sign. So we have multiple levels of confirmations that we use. And here's the market running nicely. This doesn't happen. Heidi's asking, do you have your trades set with stops and take profits? Everything is subjective. Subject to levels that I see. There's no standard, right? For example, I explained earlier when I called this trade earlier from this level here, I told everybody to take first target in this level because this was a do or die level, and that was due to what I saw on the bigger chart, right? So it's the take profits depends on the first hiccup that I have in my hand. So if I have a hiccup coming up, I'd rather take first target there, move stop. Final target is usually determined so there's no standard. It's the profit target for the daily on the US yen. I told everybody the final target will be if we grab a short, because we did this before you joined us this morning. I said if we grab a short, if we find a short and we grab a short on the US yen, my final target will be the bottom of this zone. I'll explain. I'll show you which zone. This zone, the bottom of this zone. Because once we get into this area below this line, this is a continuation zone, as you see. So the bottom of it would be my final target for today. Right? Or maybe if I see reasons to keep it, because once we break this line, there's another zone that is even weaker. There's no resistance here, no major resistance in the area. It might just bring it down all the way here. So everything to do with volume and what's going to happen after, because volume builds up while you're trading. So I don't use technical indicators often. I use mostly volume profile and volume based. I use some technical indicators such as Fibonacci, such as downchain channel for anticipating the market or for extra confirmations. But my main thing is volume profile. Make sense? And this is valid for futures and forex. Earlier today on oil, I did analysis. I said oil has a chance to go up to this price, and actually I posted to my members, the oil channel members, here oil, I said oil possibly going to 80. So if we have a chance, if we see the oil going to 80, what do we look for? And I asked that question. What do we look for a long? So basically I'm looking for the market to go back to not this price, not this, to go back to 79.60 and 80. So I'm looking for these prices to hit, these two prices. So I'm looking for a long, logical, right? So since I'm looking for a long, I'll be looking for a good level of support to grab that long. And one of the good levels is 78.37. Even for my members, I would say oil support at 78.37 area, give or take, all right? And I can also, what I do, I take a snapshot of this whole thing. So I do this, and I share it with my members. I do this, I put a line here, and I take a snapshot, and I share it with them. Possible. This is possibility, okay? This is not, we have to confirm. So there's my snapshot. This is part of what I do for my members. Sometimes it takes longer than usual to grab this snapshot, but it's part of the process that I do.
XTI/USD.
Here. Copy image and I post it. Okay, so now we have support in the area. Let's see if we have some confirmations and decide if we want to grab it long or leave it alone. The best way to handle this is to use a poke in and poke back out technique, meaning we are poking into this level, and this is, if I look at a 60-minute chart, this is the final level of entry to this next zone. Now this is a zone, this is a zone here. You notice how below it is it's a solid, all looks like one. So this is a continuation zone. So once we stabilize in this area, it means we are rejecting it. So I'm looking for a long like this. So now we're looking for confirmation, right? There's the resistance and the support using volume profile comes from a differentiation between two zones. The two zones could be the same, but there's a level between them that is different. It's clear, right? You see how this area is different than the upper area? Differentiated by this level. So now we switch to the 987 tick chart, and now we see 78.37 or 35, whatever that was. It bounced, the market bounced from it to the tick or to the pip. Do you see how powerful this is? Not only this, folks, earlier this morning, or about an hour and 30 minutes ago, I mentioned we are looking for a long on, and it's in the video. I'll share this. Hopefully I will be able to share this. I said we have a possibility long on oil since we're expecting it to go to these levels, but now we have to look for a retracement, and this retracement happened. So this is part of the strategy, which is anticipate, confirm, execute. The ACE strategy. Any questions? Heidi's asking a very valid question. Heidi, execution is important, right? It's very important. It's about your risk versus reward. That's the main thing. See, if you have a strategy that gives you a good level winning, let's say 70%, 80%, 65%, whatever it is. Now it boils down to your risk reward. For example, if I take this trade, which is to me is valid, even if I get stopped out, it is valid. Why it's valid? Let me go to my XTI USD. Let me grab it on a small scale, a micro. It's valid. Why is it valid? If I grab it from here, for example, from this line here, let's say here, upper line, this right here, right?
XTI/USD.
Now my risk is just below this level, because if it goes below this level, see this? If it goes a little bit into this yellow area, it's going to continue down. So my reward, my risk is just below. I would say about 78.20 level. 78.20, so I'm risking about 15 pips, right? Meanwhile, if I look at it this way, my reward is from this line all the way, no, my reward is this much, at least, or all the way to 80, but my risk is from here to here. So this is my risk. Even if I get stopped out, to me, this is a valid trade.
XTI/USD.
You understand? So we anticipate, confirm, execute. When it comes to execution, your stop loss has to be known ahead of time, and it has to be with logic, nothing random. Now, why didn't I get excited when the oil came back down here to this level? Because if I'm looking at a 60-minute chart, it was within this continuation zone still. I don't do limit orders, no. I will teach you what I do, and then it's up to you. I'll give you the tools. You can do your own, but I don't do limit orders. Personally, I don't want. That's why I take it easy. My trades mostly are bigger frames, so I spend my time here in the morning, and sometimes I leave the same trades over a day or two. Sometimes after afternoon, they will hit the target. Sometimes I'll move my targets. It depends. But I only do manuals. I don't do set limits, because I don't trust the news. I don't trust the markets. You notice the struggle in the area. You notice how the market is struggling in the area. But for a scalper, if you got in at, let's say, 78.35 or 38, you had a few ticks profit for a quick scalp. But again, to me, I need my first hiccup for my first target. So when it comes to first target as well, I would wait for the first hiccup, and the first hiccup might be maybe around 78.60. So that could be a good first target, and then leaving a runner. Again, don't forget, if I get stopped out, at least I made a good decision. I know my entry, I know my stop loss, and I waited for it, and I know if it goes below this level, maybe a bit lower here, as I said, here, it could continue down against me badly. So there's no need for a random stop, right? Make sense? It did bounce from 35 all the way to 50, and it bounced again a couple of times, but finally it broke the level. So the idea is, trade management. Trade management is key. Right? As long as you choose the level, as long as you know your stop loss, as long as you manage your trade, there will be some stop outs, there will be winners too, but it boils down to management, right? So oil, the importance of the strategies. On oil, I said if we break this line, it was here, right? I said if we break this line, it could come back down lower, badly against us. So I had a stop loss for a reason. So this strategy will help you stick to your stop loss, stick to your idea. Don't change it, because a lot of people will just basically will not honor their stop loss. They will move it because they hate losing. Okay. But that doesn't, it's not perfect. You cannot just, expect the market to go in your favor. Once you get into a level, and you know it's a continuation zone with the help of volume profile, for example, you know it's going to go against you, most likely. There's no need to fight it. Remember, since it's almost 11:30, the room is about to close. But for full members, I take a break and then I get back at it and I post my stuff here on these channels, right? And sometimes even in the evening when I'm not available, students or members will post their own things, right? So, the live session ends at 11:30, but we continue for any opportunities on Telegram.